Hi, this is Zach Mayer with the Bulletin Board Heroes here at Zach's Traders Cafe for Friday, the 8th of December, 43 years without John Lennon. Starting off with the FTSE 100, and here you can see there's been a nice bounce above now the 50-day moving average, 74.70, but an RSI rebound above neutral 50, which tends to be a leading indicator to the upside, and hopefully we'll get an end-of-day close through 75.40 to take us quite directly up to the top of that falling trend channel from February at 76.50. Above that, there's an outside chance of a quick rally towards 7,800, and that May resistance line projection by the end of the month. If we do break down, i.e. below the 50-day line, 74.70, then there's a risk of one final test of support towards 7,400. Moving on to the DAX, which has been in much better form than the FTSE 100 for many weeks. It's already through the previous highs of the year, 16,500. Above that, we were looking for up to 16,900 at the top of a broadening triangle from May. By the end of this month, it looks as though we'll get more than that. You can see the 50 and 200-day moving averages both rising sharply, and the run-up to a golden cross, which we should get hopefully by the end of this month, is typically the strongest part of the cycle. But looking set fair there on the DAX above 16,500. Moving along to the Dow, and here consolidation, but above the previous resistance for the year, 35,700. Above that, we're looking for initially a resistance line from the end of last year to 36,600. Best case by the end of this month up to 37,500, and that March resistance line projection. Back below the previous highs of the year, 35,700, then maybe towards 35,100, but that seems the worst that we would have on offer at the moment. Moving on to Bitcoin, which eventually did what we wanted it to do, which was to hit 43,000. In fact, we're there at the moment, 43,000, that line there, and that was the target we were looking for. The other thing to note is that we're in a rising trend channel from the beginning of October. The floor of that channel currently around 41,000, so above that, looking for not only consolidation at the higher levels, but even a push towards 50,000. Perhaps as soon as the end of next month. They want to call it too early, but it could even be achieved by the end of this month, given the way that this market can move. Very good look to the rally that we've had since October on that daily chart there. Can't resist looking at gold to see whether the market has been sabotaged by the shorters at above $2,000. So far, we've had our golden cross just in the last 24 hours, which is great, and above the old October resistance 2020, looking for a retest not only of that spike that we had earlier this month or earlier this week at 21.52, but also up to as high as 21.80 by the end of next month. Obviously, that could be quicker as well. Just want to take a look at pound dollar, and here the dollar weakening has generally helped the pound, but we had that peak near 127.30. We've come back towards the 200-day line area, 125, and that really needs to hold to underline the build-up, the positive build-up this market needs to have to get back up to the July resistance through $1.31. But the key here, holding that 200-day moving average at $1.25. Moving on to the stocks, starting off with Andrada, which seems to be getting a lot of positive coverage on social media. I suppose why shouldn't it, given the strong state of the company? Still underappreciated, at least in terms of the share price. We've had 4 tests of that uptrend line there from March. That's around 5.25 pence, and we're looking for an end-of-day close through that September resistance line there, around 5.6 pence. If we can get that maybe today or on Monday, then the initial target area would be up to 6.3 pence, which is post-October resistance, and then obviously up to as high as 7.5 pence by the end of next month. But the key here is breaking through that 5.6 pence zone, and probably as far as the RSI is concerned, getting back above RSI 50. We haven't been back above that properly since the end of September. If we do break onto the downside, then the next level down, probably down towards the 4.8 pence level. But this looks like the floor of that rising trend channel from back at the beginning of the year. On to Creo, which has done what Andrada has yet to do, i.e. bounce off the floor of the rising trend channel there. Bit of resistance around current levels, 36, 37 pence, but above that, looking for 47 pence by the end of next month, or hopefully rather sooner, given this very strong consolidation that we've had. We've got the 50 and 200-day moving averages both rising at the moment. The stock which has probably got one of the more intriguing charts on its daily chart is Eneraqua. Here we hit our initial target there around 58 pence, and that's also the area of the old August low there. That was towards the same area. Above 58, looking for the shares to fill the gap up to as high as 91 pence by the end of next month. That's obviously a punchy call, but the way the candles are and the way everything else is set up there, it is looking quite encouraging. On to Empire Metals, where we had a gap floor rebound during the middle of the week on Wednesday, around 8 3/4 pence, and now we've gone into a bull flag, and looking for the bull flag, V-shaped bull flag, to break out to give us 15 pence. Perhaps as soon as the end of this month, the way things are going. Otherwise, I'm sure that will come in during January. Ideally, there's no end-of-day close back below 8 3/4. Obviously, even better than that would be if we can stay on the right side of the 10 pence level. On to Faron Pharmaceuticals, which I don't normally cover, but here we've had a price channel rebound after yesterday's news, I believe, and looking for the shares to hit 360 at the top of that rising trend channel from back in April. Upside valid while we hold above resistance on the way down at £3. So looks as though Faron on its way over the near term. Gfinity, a stock which has always been rather difficult in the recent past, as you can see by the daily chart, but just the first hints that we've hit the low. The reason for saying that is that we had the old low in July at 0.06, and we've had a bear trap rebound from below that. Above 0.06, looking for up to 0.1 pence by the end of next month, or hopefully even sooner than that. I've covered Novacyt quite a lot in the recent past, largely because there aren't that many bullish situations, but here we've got a V-shaped bull flag, looking for the shares to at least hit 76 pence over the next week or two, and then maybe up to 90 pence by the end of next month. All the while, want to stay on the right side of 60 pence. Another situation which looks as though it is turning around is Polarian, and here we've got an extended wedge breakout, unfull gap to the upside yesterday, and we've broken yesterday's gap day, so that is very encouraging. Looking for the shares to hit 10.5 pence at the top of that October broadening triangle by the end of this month, but that's bear trap gap reversal, very strong signal there on Polarian, and a light at the end of the tunnel after a very extended bear phase. Speaking of bear phases, we've got Powerhouse Energy next, where I think the new CFO has turned up, which is always very pleasant. We've got a support line projection down to 0.24. Above that, we're looking for the 50-day moving average at 0.34, and obviously November resistance at that level. Maybe we'll get that by the end of this month. Stock which is rehabilitating itself by the day is Panther Metals, which is very encouraging to see. Here we had a bear trap gap reversal, gap off the low, and also then breaking back above the old March-April support there at 2.6 pence. Current situation is we've got the 50 and 200-day lines rising, and we've nearly hit the target that we had previously at 4.25 pence. Above 4.25, looking for up to 5.25 pence by the end of this month. So a decent turnaround there, backed by bullish divergence and that bear trap gap reversal. So all the things that we like to see in recovery situations. Another potential recovery situation is Revolution Bars, where we've had basically this inverted head and shoulders. We've broken the right side of that shoulder, breaking through 4.6 pence, and we hit our initial target there around 4.8, above 4.8, looking for 6.5 pence by the end of this month, which is a resistance line projection from this time last year. There is the 200-day line in the meantime, but the turnaround here looks so sharp that one would say that that should be cleared relatively easily. On to the last two. The first one is Touchstone, and here bear trap gap reversal from below the old October support there at 52 pence. Above 52 pence, we're looking for at least the 200-day moving average at 64. Big picture target here. Perhaps the end of next month is a bit too soon, but big picture target here up to £1, so maybe for February, something like that. But the key here is to stay above that October support at 52 pence. Finishing off with a stock which is not exactly the most obvious turnaround situation, but we have potentially a broadening triangle base. We've got bullish divergence, and we've seen XL Media above its 50-day moving average at 7.4 pence for the first time since September. Looking for at least the 8.8 pence October resistance, and then if we're lucky, 10.5 pence by the end of next month. That's it from me today. More updates tomorrow.